Bitcoin's put on $2,500 in the last 24 hours. Just a month ago was when a lot of retail arrived. And since that time, Bitcoin's been giving them a lesson, giving new traders and investors a lesson on what happens when we see the market climb to either new fresh highs or just a ton of interest comes back into the market. We've seen this time and time again throughout this cycle and previous cycles. Now, if you have been following because you've hit the subscribe button, you know that we've been discussing when these retail investors have arrived into the market and then what happens to them almost immediately after retail comes into the market. Essentially, a huge pickup in media interest brings on a whole lot of new money, whether that's retail, smart money, but then almost quickly after that point, the market reverses and takes some time to consolidate. So in today's video, I want to discuss a particular signal that we've been covering on the channel now for several years. In particular, it helped us call the tops in March and then again in the December and January top, which in both occasions led to a 30% correction. Now, it's not something that only shows up on Bitcoin. We've covered it on the S&P 500, on the NASDAQ, and also if you're only interested in altcoins, we've also covered it on altcoins. It happens time and time again, but the main reason why many people miss this signal is that it can be a little tricky to identify where the significance of using this signal comes in. Hit the like if you've found value from this, or if you've been around in the past where you saw this signal play out in real time and you're able to profit from it and potentially even save some money. So what is this signal for anyone new? We're looking at 3 bars down, or from a reversal, a 3-bar up rule. From a low, you want to see these 3 bars up. It's a really strong signal that there is a very high chance that the low is in. But in this case, we're coming in from an all-time high price on a weekly chart, which is a little bit longer than a daily, so it's got some more strength in it. And at the moment, like you can see right at the top here, red, red. So what we don't want to see is 3 red arrows to the downside. And at the moment, the price is about 2% off, invalidating this signal. Of course, anything can happen. That's just the nature of all markets, no matter whether they're manipulated or not manipulated, which every single market is manipulated to some degree. But in the case here, if we can get this nice close before the end of the week, is 3 days to go, then this should invalidate the signal. And what we've seen in the past is 3 bars down from these highs, which has led to a suppression of the prices. So I'll show you the example that we had most recently in December of 2024. That's right here, coming in from this all-time high. The price ran up. These are the highest prices the market had ever been. Remember, $108,000 at the time. And then straight from that point, there was a huge sell-off. So we had 3 days down, 1, 2, 3. Now I'm talking down days, lower highs, lower lows. And like I'm using in this example in today's video, we'll be looking at it in terms of the weekly chart. So we're using it across multiple timeframes to give us different strengths of the signal. In this case, it was a daily. The price did go slightly higher, and that was when Trump was inaugurated. So an absolutely worldwide event day could only fetch $1,000 more in Bitcoin, less than 1% higher in that price. But ultimately, the buying frenzy had come to an end, and you had to wait many, many months, or we all had to wait many, many days, weeks, and of course months until we saw a new all-time high. So from the December top, sure, we got $1,000 higher, but the close was much, much, much lower. And from that January high, well, we had to go all the way out to May. So roughly around 5 months it took to get to a new all-time high price. So ideally, we don't run into anything like that right now. We don't have it on the daily, which is what I'm looking at here, but on the weekly, we have 1, 2 forming at the moment. So a move down this week would put this into 3 red days or 3 red bars on the weekly chart to the downside, which typically would slow the buying frenzy off, and it could take some time to consolidate before we move to new fresh prices. And I just want to mention that this isn't all bad news. It's not any sort of warning. The cycle is not over, nothing like that. These are just very early warning signs that could suggest that at least one, the price could slow down and we need some more time to consolidate. And so a couple of these signals that you can see, one in particular, that was the one here in December. I discussed it on the channel. Michael discussed it on his channel, part of the Investor Accelerator, of course, that these are very important signals to be watching for price slowdown, especially when they come out towards peak excitement. And from a low point, that's what you want to see as well. From peak fear, nice 3 bars up in a row from a significant turning point. Now, I want to show you some of the hopium around this too. It doesn't mean that every single time a signal happens that there is going to be an absolute collapse. This one just has a very high probability of happening. I'll show you some of the failures so that we can at least bring the vibe up and notice that it doesn't have to always be this way. But as I said, probabilities are quite high. So looking at this one here from March 24, which again, we put out at the Investor Accelerator and said, it's probably likely we're going to spend several weeks at first. And then as this began to develop, I said about 6 to 8 months, 4 to 6 months, it ended up being 8 underneath that high because we hadn't seen anything like this before. We hadn't seen an 8-month consolidation underneath the tops before. But alas, this cycle did it. So we got 4 to 6 months in the consolidation, and then the market started to climb out of that. So it basically slows all of the momentum. Here you can see red, red, red off the most significant price we had in history at that time, $74,000 all-time high price. It attempted another couple of shows here to get back to that previous top, and each time it got back to the 71, 72K level, it failed, and then we had lower downside. It led to a 33% correction. I want to show you the flip side from a very significant, fearful news event. This was when basically everyone was looking at a recession. We weren't looking at a recession ourselves here on the channel because of our experience with the 18-year cycle. It just was not time for the market to go into a mega collapse, banking crisis, all out fearful show. And so that's why I've called this one a very significant low in the market. Although it doesn't look like it when you look back at history, the fear at that time was extreme for the traditional markets. And from that point, green, green, green. Prices never went back to $20,000. There were a couple of times as the consolidation occurred that, yeah, there was a lot of fear thinking that maybe we could go back to 20K, but that was an extremely strong low. And as I talked about it on YouTube and on X, it seemed unlikely that we're going to come back to that level because of the extreme buying that occurred. So using this signal alone, we're able to see when we shouldn't be going in heavy at the tops, as I showed with March in 2024, December 2024, and when we should be going in as heavy as we possibly can, like March 2023. Those are the times I was extremely bullish because of the fear in the background, yet the price chart was not suggesting that it was time for a recession. The cycle analysis was also not suggesting it was time for recession. How does that help us now? Let's also uncover that, but I'll just show you a couple more here. All-time high price, 1, 2, 3. The price did go slightly higher in that final all-time high, but of course it failed from that point. So it's basically telling you that there is a slowdown coming. However, it can go slightly higher, but it's not sort of the trades that I would be looking at myself when I'm trading Bitcoin or cryptos. I want bigger moves to the upside, not just $1,000 past the all-time high. April, 1, 2, 3, massive sell-off. This is April 2021. I also talked about it on YouTube back then, 4 years ago, 4.5 years ago, and the market basically sold off from that point. And here is one of those failed signals towards the end of the cycle. This is kind of what we're hoping for in a best case, worst case scenario. Worst case scenario, we get the 3 bars down, okay? So there's the all-time high. You get 3 bars down. The market takes a few more days to consolidate. The move doesn't get going just yet, and it does push to new all-time high prices, but it's still uncertain whether it wants to continue on for the next big boom. And in this case, for 2017, you had the 1, 2, 3 off this bar here on the 8th of November. So that was the all-time high at the time. Big sell-off. It came down, pretty significant decline here, 30% again off that high. But then the market was able to turn around and run into a new all-time high, being the final cycle peak 35 days later. And here is just one more going back to the earlier stage, September 2017, 1, 2, 3 days down. And that stayed underneath the all-time high for 40 days. So you're looking at about 6 weeks underneath that all-time high to consolidate before it was able to climb back up. The indicator I'm using is part of the TIA indicator suite, and it's the GAN Swing Pro. So once you've got that added to your charts, which you can find a link to in the video description, go to the settings, and then we want to turn on all of the bar types so that we can see each of these bar types coming up, so that we can recognize them when these signals are forming towards those peaks or those significant troughs. In the case of Solana, same sort of thing. Weekly bars to the downside. We're on a much longer term time frame here, weeklies. Market came crashing down from that $265 all-time high. It made it by a few bucks. Then we had the inauguration pump, lower close, and then again, the same signal showed up on the weekly chart. So there was a ton of selling. This is not just about hating on certain things. It's literally the buyers and the sellers in the game are selling off like absolute crazy, and it's showing up on the chart. It's telling you right here that they do not want a piece of this anymore, and it's going to take a fair bit of time for a consolidation to happen or a bear market for the market to come back to those previous levels. And so far, Solana still has not come back to those prices. It's now been 200 days since the all-time high, and the market is still down a significant amount from that top, down about 41%. So it's not all doom and gloom, because the signal hasn't formed yet, and ideally for the bull market to pump, and obviously I'm on the side of the bulls at this point with where I'm invested, I would love to see this at least pause. Worst case scenario. Best case scenario, we get a nice 2% move higher, break the previous weekly swing top at $119,800, and that would then fail the signal, invalidate it, because we would then have red, red, and green. So looking at that signal on the S&P 500 is a great segue into what the market has done in the last 24 hours, because we've seen it happen at the previous all-time high price just before the tariff collapse. Again, the signal works. If you've got the chart, you've got the indicator suite, you're going to see it play out time and time again to help you stop going in heavy when there is extreme greed. At these times, there is extreme greed again. All-time high prices, people going nuts. 1, 2, 3 red days down, red bars in particular, giving you lower highs, lower lows. And of course, the market continued to collapse from that point. And it also gives you some earlier warning signs. Another all-time high, 1, 2, 3. And from that point, the market did not go anywhere. You just saw the price basically stall around 6,000 points. And yeah, it takes some time, because that's essentially how the markets work. You've got some distribution playing out, and then you get the final shakeout. Market collapses from that point. So to today's environment for the S&P 500, we had a run up and a run back down, lower close here. Is it still following the cycle that we're watching? Looking at the 5-year and the 20-year. The 5-year looking relatively similar. The 20-year also looking a little similar here, but it's looking a little bit weaker on the 20-year compared to where we currently are at this point, which probably isn't a bad thing considering the significant decline that we saw back in April. So taking off the 5-year, that's where the 20-year is. It's also still showing a rally and then into another low in August, another rally into late August, and then lows into late September, early October. I covered this in yesterday's video, so I'll leave a link to that at the end of this video. That goes into greater detail around what happens, or what generally happens through Augusts going back decades. In terms of the NASDAQ, similar sort of thing. It did rally overnight, had a little bit of a pullback, checking out the bars here, has not broken to a new fresh all-time high, but it seems to be tracking pretty similar to the 5-year cycle as well. So this is the 5-year cycles that we'd covered from COVID, overlaid into today's market. Have been some pullbacks on the 5-year as well. You can see July through to August, we're looking at that overlaid. You've got some consolidation around this timing, and then the market began to break higher again. So we could just be in this shorter term consolidation for the NASDAQ market before it moves higher. The US dollar is also showing a little bit of weakness again, which is good for asset prices. So I think this is going to be another good one for BTC and commodities. This over the long term, Still got further to break down according to what we're following here. Our thesis is the 18-year cycle in the second half of the cycle. So this is the cycle moving higher before we get into that peak and then the ultimate collapse. The US dollar typically finds further downside, and that is essentially what is happening. We have overbalanced basically everything in this bull market, this USD bull market, and to this downside move, it's under the weakness, it's under the 50%, it's underneath 100, 101, which was where the resistance support level was. And I think it's a matter of time now over the rest of this cycle that we would potentially see further downside here for the US dollar. And that, of course, is, well, allowing the asset prices to move higher, even if it is just because they're priced against the US dollar. Gold hit a new all-time high price, jumping to 3,534, and silver has also continued to climb higher here after a pretty significant move to the downside, ran down about 9% and has now climbed back to 7%. Along with that, we're still seeing signs of ETFs coming out, this time SBI Holdings to launch Japan's first Bitcoin and XRP ETF. We've got a nice little pump up on XRP as well, probably helping with the market sentiment. 74, we've hit that again. Greed, crypto market sentiment, so Bitcoin and cryptocurrencies did climb higher. I personally don't know if I don't think this is enough time for a considerable reset, but we are in the final stages of the cycle, and typically the greed outweighs the fear. There's usually not enough time for the market to reset, and that's why we continue to see the volatility towards the end of the game, end of the cycle. The exchange volume continued down into the 6th of August. However, it hasn't broken the lows. So we'll continue to update this. We're potentially running into a higher low at this point. That's ideally what we want to see. The breakouts in the exchange volume is a good thing. And then any sort of higher lows along the way will hopefully just sustain the buying activity, the trading frenzy that we see towards the peaks. Google Trends have continued higher. So even after comments of people saying that no one searches Google anymore, I think that's absolute bullshit. I can't say it enough. It's just bullshit. Google, massive company. Yes, ChatGPT is there, but people aren't just switching to ChatGPT and saying, give me the search volume for crypto and Bitcoin and just searching crypto and Bitcoin in ChatGPT. I think it's just such nonsense. I can't say it enough. So in the meantime, while I get my rant out, Google Trends is actually showing what the markets are doing here. And you've got crypto at 43, Bitcoin at 64 for the past 90 days. Good signs there. People are still searching this in the in the search engines. And for the 12-month outlook, we're also seeing a tick up here on the weekly analysis. So Bitcoin again cruising a little higher here, and crypto also cruising higher, taking out the previous top there of July. So that takes us to the crypto charts, also looking relatively strong here for total 3. That includes a lot of cryptocurrencies. It includes everything from XRP down. So at a rough calculation, total 3 makes up about a quarter of the total cryptocurrency market cap. Rough calcs, about $1 trillion there, which is why this chart looks relatively favorable. Nice bounce off 950. Oh, of course, you can see it here. There's $1 trillion. Okay, so the bounce off there, 950, 900, that's all in the strong part of our 50% and above the previous resistance, potentially now becoming support. So even if we do see these rallies up, which is what I'm expecting, or ideally what I'd like, rallies to break those highs, fail the signal, then any sort of pullbacks remain above the previous resistance levels, now becoming support again, just giving it more time to consolidate, especially with the greed picking up. So I don't think that that's enough time, or not enough time that I'd like to see. But at the end of the day, what I like and what the market gives me, two different things. The weakness here is if it was to break down from 900 billion. So at the moment, still seeming okay there for total 3. I'll take it straight across to others. This one here excludes the top 10. So when we exclude the top 10, you're basically taking out like 90% of the market cap there. 2.3, half a trillion, 900 billion, 200 billion, 160, 100 billion, 100 billion, add that all up, gives you about 80 to 90% of the market cap is gone when we take a look at others, so the dominance here. 7.5% It has bounced off its support as well. So this area that we've been watching here for some strength in the altcoin market to come back. I've started to see all the specific altcoin influencers starting to jack up their callings for get in now before everything runs to millions of dollars and you miss out on absolute millions. But at the moment, it still has not broken past 8%, and there is a resistance there at 9%. So in the meantime, sure, load up the bags, get all the alts that you think you need to get to become a multi-millionaire. If you start to see time run out and resistance levels come in, this others chart's getting to roughly around 9% and things are slowing down, that could be a good area to at least maybe take some profits to go and buy a Kia or a Toyota or something like that, because it might not get that far. It might not break the 10.5 level, which is what we're looking for a significant overbalance in time and price. Now, if it does get to that 10.5%, hang on for the ride, get whatever flipping car you're looking for, the Audi, the Lamborghini, the whatever, right? That's probably the level that you're going to start seeing it. So up to 9%, get your Toyotas and Kias and whatnot. Above that level, that's probably where you can go get your Mercedes, Audis, Lamborghinis. The USDT dominance is also working in favor of potentially some of these supercars if you're looking for those. 4.2%. The lows at 4.14% are getting closer again. You can see as we zoom in, nice resistance, nice rejection at 4.5. Ideally, that's what we wanted to see. So far it's happened, but we need to break the swing lows as well here at 4.1. And then you can start to look for start to put your deposits down for your supercars if we break 3.7%. Things could get really, really lovely and crazy between this 2.5 to 3.7%. But in the meantime, if it continues to grind, well, then you're just going to keep seeing that rotation of crypto, rotation of stable coins between different assets. And for now, XRP is looking like one of those stronger assets. Nice $3.30 pump up yesterday around 11%. And this also works relatively well with the timeframes I was looking at. So when I discussed this in previous videos and in particular yesterday's video, talking about time running out doesn't mean that the price is over. I can't stress that enough. I don't know why I get so triggered on that when people get the wrong idea. Maybe it's just my explanation. But when I'm saying time is running out, that doesn't mean that the top is in. It just means that its time is running out for any sort of mega prices. So those mega prices could happen now and super fast. We saw 11% overnight. 13 months from the low is the current month we are in here for August. So if we do see these big prices blow up, that's probably where I would start to assess my position because of time running out. So hopefully within that time, you get these big booms, price takes off to $5, $6, $10. Who knows? Maybe it goes to $589. Obviously that's a joke, but this is probably that time period that we want to see this thing pump up around August to September. Ethereum's also doing similar things, moving higher. 24 hours, it's gone up 6%. So nice strong move here. And the next resistance overhead, obviously around $4,000. And the extensions looking for those price targets, roughly around 4,300 should we be able to get past these highs. That's the next level that I'm looking for ETH, around that 4,300 bucks. And ETH BTC has put in a fresh high now. It broke the previous top. We've now got a roughly 200-day fresh high, 3.3%. The overbalance in time and price has been met for the first target. Second target comes above the 50%. So I think this is unlikely for this cycle, 0.053, but that doesn't mean that ETH doesn't have any more room to run. It probably has a solid 50 to 60% against BTC that it can run more so than Bitcoin. So if Bitcoin goes up, there is the possibility that ETH could run up to 50 to 60% more. Yes, there are plenty of overhead resistance coming up in around 15 or so percent. There's the long-term support line, which was broken down this cycle. Then you've got the tops coming in at about 4.1%. That's about 22% away. And then you've got all the previous lows coming in at about 4.8, 4.9%. So roughly around that 5% mark, which gets you closer to the 50% outperforming Bitcoin. So Bitcoin goes up 100 grand, or Bitcoin goes up 100%, ETH should go up about 150%. if it is going to follow suit here and break past the resistance and get towards that next resistance level at around 5 to 5.3%. So that's what all the ETH bulls are looking forward to. In terms of Solana, it's still dragging the chain here, holding back, still under $180. It has had its really good run and at the moment seems to be consolidating, higher lows, higher highs. So still all good stuff here, but still, as we looked at earlier in the video, 40% underneath the all-time high. And that's showing up with its strength against Ethereum. This is a simple comparison of Sol versus ETH. If this chart's going up, Sol is outperforming ETH, and it did outperform it by an absolute staggering amount in that first half of the cycle. Now, these last few months, ETH has absolutely smashed Solana. So as this chart goes down, ETH is getting more strength or showing more strength versus Solana in terms of those gains. So ideally, you want to see this thing swing around and break past those highs if you're holding Solana. If you're holding ETH or heavier bags of ETH, then you'd pretty much want to see this thing absolutely collapse because that would mean ETH is much stronger. It's a better hold than Solana is. At the moment, it's obviously ETH being stronger than Solana. And to put those all together, starting from the beginning of the cycle, looking around the 9th of November here, they're going to vary a little bit the more you move this chart around. So using this chart, you can see the comparison between each of the altcoins and Bitcoin. I've kept the colors pretty similar to their logos except Doge. So Bitcoin being orange, XRP going with the white here, and then Solana in the purple. So Solana obviously had a huge move earlier in the season, but has since stalled through this entire period. So the best bet was to rotate from Solana into something else. And this is in a perfect world. Obviously, we don't live in that perfect world in trading and investing. And rotating into something else that was going to show more strength. XRP went on that strong move earlier on, but it was still only keeping pace with Bitcoin until now. So that's until July. So just a month ago, XRP has started to show that strength again. You could argue that it was January, but it did come all the way back down to where Bitcoin's price was through April, May, and below it in June. So potentially this is that final leg here for XRP. Could last a month or two, hopefully longer for the holders, of course. But just taking a look at it in terms of percentages on the closing price, these are your two leaders at the moment. But XRP in a better position here as it's taken out those highs, whereas Solana has remained underneath these highs after those significant signals. Now, the ones coming through at the lows, the green is Dogecoin. It's got a lot of resistance overhead. You can see the green lines here. Yellow is Binance, which has been putting in new fresh highs, but still sort of lagging throughout this entire cycle. However, that now that it's put in those highs, it could have that room to move, that price discovery, and similar thing going on here with ETH, currently up about 200%. You can see these the low points, or sorry, the high points coming in around they were $4,000. Obviously, we're up around that level now. So if we can start to break that, then it could give that bit of room to run to catch up to where Bitcoin is, maybe even closer to XRP. So over the next 3 days, all eyes should be on, can Bitcoin get above $119,800? That's the level here that I'd want to see Bitcoin test. Doesn't need to close above it, but we need to get a testing price above that level to cancel out the 3-bar signal. We don't want to see this at the all-time high price. Like and subscribe, stick around. We'll keep updating this on the channel, and I'll see you guys back here at the next video. Till then, take care. Peace out.